The Dow looked to be extending record highs Monday as China concerns dissipated. Now, Ted, earlier all stocks were in the red, but then eventually turned higher around midday trading. Is this a sign that, in fact, the confidence about the China bull story, the China story or growth story continues?
Oh, I think I think it's all relative, but I think China is still the 800-pound gorilla in the room, and nothing moves in a straight line. Though investors' expectations are usually a little exaggerated, but I think the market pretty much shrugged off that economic news that came out of China this morning. It's all relative. China's not growing the way it used to grow, but it's still growing a lot faster than the U.S. economy and most other economies in the world.
Now, options expirations are coming up as well. Historically the market was able to move a bit higher during options expiration week. Do you see this happening again this week? Could we end on a higher note on Friday?
Well, I don't know. I don't know that that's in fact correct, because I think I'm not sure that the prior trading days up until option expiration are an indication of a whole lot. And in terms of the market, almost every day that we do better here, it's a new high. It almost gets a little boring. We're getting spoiled, and one doesn't know how long it will continue. But we could be $1 higher and still be making a new high. I think the market, to me, is certainly technically probably overbought short term. On the other hand, the momentum remains positive. What's completely missing from today's session is volume. There's literally no volume. I think everybody's calling for correction, and I think it's fair. The only problem is they don't ring a bell or throw a light switch, so they're not going to tell us when that's going to happen. And it will happen when we least expect it, and for reasons that we probably don't understand as you and I speak today. But I think that a rising tide has floated a lot of ships here, and certainly we're due for a rest. And I don't personally see anything in the cards that really will warrant a big push from current levels higher. I know at the moment we're sort of going through a little bit of a love fest in Washington, but my guess is the end results of that are not going to be a whole lot different than what we've experienced in the past in terms of everybody being slightly dysfunctional when it comes to resolving our problems. So I don't know that we can look for that for any kind of meaningful solution. Hopefully we can, but so I think, I think if you're long stocks, you can enjoy the positive momentum. If you're not long, I think you kind of have to be a little cautious here. In terms of shorting them, picking tops is no different than trying to pick bottoms. It can be a pretty frustrating and expensive exercise, and sometimes you have a better chance if you buy a lottery ticket.
And this Wednesday, we've got the retail sales data for February. And it's largely expected to factor in the fiscal drag on the economy. How do you think the markets will react to surprisingly good or a very bad number?
Well, I don't think the market's prepared for any really bad numbers. We saw that a couple of weeks ago out of the Eurozone when we had some bad news out of Italy. So I would have to think that the market's pretty much priced to perfection at current levels, but and therefore not a lot of room for some disappointing news. And in terms of the retail numbers, the big question is, was that email that we all learned about in late last month that came out of the Walmart organization about how bad their sales were, blaming the payroll tax increase or the reinstatement of the payroll tax. Will that be a widespread? I guess we'll have to wait and find out.
So if we got a surprisingly downbeat number, how far at this point could the markets correct? 5%, 10%?
Oh God, I don't know. Nobody really knows. I think it's kind of silly in a way to try to predict something like that. You just don't know. Markets tend to not react rationally. There's nothing rational about the stock market, and unfortunately, things only become clear to us with the benefit of 20/20 hindsight. I simply think that A normal correction, 5 to 10%. But I mean, more than 10%, all of a sudden we're back in bear market territory. I mean, I know what the textbooks say, but reality is markets don't follow the textbooks, and we only realize they have until it's too late because it's always after the fact.
Thanks, Ted. This is Andrea Say reporting for The Street.